Airline stocks are back in focus. In fact, the crude hitting $50 per barrel at a 9-month high. That does mean slightly higher fuel, higher operating costs coming in for the airline stocks. If you look at the airline stocks today, well, IndiGo is slightly under pressure, down over 1% in trade. However, Spice Jet has gained considerably, over 100 rupees per share. It is up over 3% in trade. Firstly, just in terms of the impact of the higher fuel prices, well, if you look at the fuel prices, fuel in fact makes nearly around 40% of the overall operating cost for airlines. Every $1 change in fuel price does impact the EBITDA by nearly around 60 odd bips. And if you look at the crude prices, they have risen close to around 25% in the recent weeks, right from nearly around $40 per barrels. Crude is now at $50 per barrel. So that does mean that we should be seeing some amount of impact coming in on the operating costs for the airlines. Having said that, government has already allowed airlines to in fact operate at nearly around 80% of the domestic pre-COVID level capacity. While IndiGo does operate at 70% level of capacity, IndiGo expects to reach 100% capacity by nearly around early of next year itself, and 80% domestic capacity by end of December itself. When I have spoken to various analysts, they do mention that higher capacity utilization for the airline stocks would mean higher revenues for the airlines, and hence crude, if at all it does rise to a certain extent, that should be okay. Airlines should be able to absorb higher operating costs if at all they do see higher utilization of nearly around 100% next year itself. So yes, from that perspective, IndiGo, if at all they do operate at a 100% capacity by next year, that should be positive for them, and they should be able to offset the crude price rise slightly on account of the fact that they will see higher revenues. But there's a limit to which the airlines would be able to absorb these high crude prices. Analysts have factored in nearly around $50 per barrel of crude prices, and well as $100% capacity utilization in FY22 estimates. Crude price rise beyond a certain level, say beyond $55 per barrel or $60 per barrel, then we definitely have to relook at the estimates, is what the analysts do mention. Besides that, of course, when we at ET Now have spoken to IndiGo management, they have stated that the crisis scenario for the entire airline sector is receding, and also they do expect to grow faster in both domestic as well as the international capacities. In fact, as of now, IndiGo is operating at nearly around 20% at the international capacity, and they plan to run at normal levels of international capacity by say end of 2021 itself. If you look at Spice Jet, well, this stock is up nearly around over 3% in trade. It has doubled just in about from the November odd levels. The stock has doubled. Spice Jet has partnered in with Snowman Logistics as well as Home Logistics for the transportation of the COVID-19 vaccine. Cargo revenues right now form less than 10% of the overall revenues, and yes, with this partnering in terms of the transportation of COVID-19 vaccine, we should see some amount of support or some amount of further gains coming in from the cargo revenues for Spice Jet. Not just that, we're still awaiting the DGCA approval for the Boeing 737 MAX. If at all we do get that, yes, that should be very positive for Spice Jet, as well as Spice Jet has accumulated claims of nearly down 950 crore with regard to the MAX grounding, and whenever we do receive clarity on the return of the MAX aircrafts, the settlement process could see that Spice Jet would get the much needed cash flow. So yes, watch out for the airline stocks in the next few weeks as well, and keep an eye on the crude prices too.